Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about the federal inheritance taxes and if you're required to report that to the IRS when preparing your tax return. So I'm going to walk through each step on the requirements set by the IRS and try to help you guys out in this area because it can be a very confusing area of tax. So I'm going to try to make it as simple as possible. This only applies if you received $1,050,000 or more. So this is going to exclude most of you out there. So if you've received a fairly small inheritance, you don't have to worry about reporting that to the IRS unless you're over this amount. You've heard it out there. This is commonly referred to as the death tax, just because this money's really already been taxed once, but you're getting kind of taxed again. So but it is what it is. You're taxed on the money, all the money and property left behind. So if you're in the will and it's being all left to you, you are required to pay the tax on the fair value of any of that property and the total amount of cash. So at this point, it's important maybe to get some legal help gathering up what those amounts might be and figuring out the fair market value, because you're going to have to figure out the value of homes, cars, any of those assets, boats, all those assets gathered, and figure a total what that is worth. So that becomes a tricky area because you're taxed on it, so you might as well spend the time to get the accurate amount of what it's worth, and you don't want to make the mistake of over reporting what it's worth. In this case, you're better to go a little bit lower if you can, as long as it still falls in the accurate fair market value. States do tax you as well, in addition to the federal government, and each state has their own requirement on this. So you have to look at the state, the state that you live in, and what their requirements for reporting on. At our site, HarborFinancialOnline.com, you can prepare the tax return online, and you can as well do the state tax forms on there, and it'll walk you through how much tax is owed for an inheritance for that particular state, as well as obviously the federal forms that you have to fill out. Each state is completely different, so that's important to look into and to remember, because it's not just like the federal government where you have one way of taxing the inheritance. The states are going to be different. I'm going to go through the rest of the bullets here. Now, the second one's important. You have different tax rates, and if you're a close family member and the money is left to you or the property, you're going to be in a lower tax bracket than if you were a friend or a distant family member. So that's important to remember as well. You do have to fill out quite a bit of forms for the federal government and the state level. So that's why I recommend doing the tax return online if you can, because if you attempt to fill out the forms yourself doing this, most of the time you're going to make some errors and probably end up paying more tax than you have to on this, because there are a lot of deductions and exclusions for receiving inheritances. So that's something to remember. Again, get the fair market value of the property. Here's some of the items that you will be taxed on: cash, all bank accounts, any insurance settlements you received, stocks. Stocks can be tricky because you have to decide to either keep those stocks or sell them, and then if you sell them, you have to figure if you had gains or losses on those stocks, and that can be confusing. At that point, you may want to talk to a CPA to see if it's better to keep the stocks or to cash them out and sell them. You have bonds too. You're going to have to get the value of those bonds and decide if you want to sell those as well. There are some adjustments to the inheritances you receive, such as debts. So say you receive a home, or you may receive a couple homes. In that settlement, and while getting that inheritance, you have to figure out how much you owe on that property, because you're going to have to take the value of that property versus what you owed and figure out what the gain or loss might be, because whatever is owed on that will offset what it's worth. So that's important to remember with a mortgage. You're going to have additional fees with an inheritance, so you're going to have lawyer fees. That's going to offset any of the cash that you received. So if you have lawyer fees of $10,000, that's going to offset any, say you receive $10,000 in cash, that's going to offset any tax on that $10,000. The federal government does offer a lot of exemptions to reduce the taxes on this type of tax, so you're gonna definitely get an advantage by doing the return online and qualifying for all those exemptions. Any charitable you're going to get charitable deductions for any money you donate from that inheritance. So you may decide to donate to a university or a hospital, something like that. Any of those donations will be deductible as well. I would recommend checking out our online calculator. I'm going to take you to the site, and on the calculator here you can actually put in the amount that you received based on all the property and cash and see what kind of taxes you're going to owe. So I would recommend checking this out. You can email me at expert@harborfinancialonline, or check out the website harborfinancialonline.com. We have more information on other areas of taxes, deductions, and credits, and it's all a way to lower your taxes and increase your refund. So hopefully you found this video helpful. If you have any questions, please send me an email, and hopefully you'll check out some of my future videos. Thank you.